Hi everyone, Billy here from iTradingU. I want to just talk about something that's popped up on the screens today. We were sitting here watching the markets and all of a sudden realized that gold looks extremely weird considering the previous levels that we saw just yesterday. If you look at the price graph and the price action, you'll see that there was a breakout that happened very, very powerfully. And it is almost out of character in terms of what we've seen the previous times. Now, the problem is at this point, we don't really know if this move will continue, if this breakout will continue and the gold price will go up from here. But just a little bit of research in the market kind of have us believing that this might be a fake move up. And as a result of that, we thought of showing you one or two things just to quickly do to capitalize on moves like these when you see them. I mean, in essence, if you just look at it, gold in itself shouldn't be this high. This action that happened today is really out of character for what we've seen in the past. I mean, if you think of it, there's been slow buying out of China, slow buying out of India. In fact, one of the biggest gold ETFs, Spider, have seen consistent outflows of money out of their fund. And I think if memory serves, they're at a 5-year low in terms of holdings, which as a whole speaks to the general sentiment of people not really looking at holding on to gold positions for too long. So to see a spike this big means that something's happening. And with a little bit of research, we found one or two articles that speaks to this move. And the one we found was from Zero Hedge, where they said that there's a company in China who's been under investigation about almost similar to a Ponzi scheme, where they've been selling assets on a secured basis where the assets that they pretend to have as security does not even exist. And in addition to that, the assets have been leveraged a couple of times over. What Zero Hedge is suggesting is that the unwinding of these Chinese commodity finance deals would also include the buying back of short hedges. In other words, people looking to buy physical gold or paper gold in this instance to close their positions. So if that is the case, we are seeing some artificial interest in the gold price here. And potentially the next move from here is that it's going to be mean reverting back to the 123 to, let's say, 120 range, somewhere there again. Now let's look at this. What can we do? I mean, as we said already, we at this point we don't know if this is a real breakout. We'll probably only see tomorrow when the price action continues to see if this momentum is continuing in that direction. But if we're assuming, and if we're going against the thought that it's broken the 50-day moving average, it's broken the 200-day moving average. In fact, the current price as it is here is above the 20-day high. So in other words, the previous 20 days weren't as high as this. So there was a significant move. And to continue on such a move without real fundamentals will be very, very tricky. So when we see stuff like that, there's two things we can do. We can physically take an underlying short position in the gold. In our example, we're going to use GLD, which is the ETF for gold, to express our view. The problem with that is we're taking quite a significant risk, because if this really is a breakout, I mean, that can continue higher quite a bit. So our stop will have to be relatively far away. If we do want to short this thing, our stop will probably be at, let's say, the 50-day prior or 55-day prior high. Another way to express this view is to use options instead of going short the actual underlying gold. Now, if you look at the options price screen, you'll see that a 1 week expiration from today, a 123 put option only costs 18 cents per option. So for an option contract being 100 shares, that's $18 per contract. If you want to give it a little bit more time even to see what materialize, you can do the June expiration, which is $20 or $21 for a 123 strike. Remember, we're not trying to pinpoint a movement. We're not trying to be 100% accurate. We're not saying we think the gold price is going to move up or down to a very, very specific extent. All we're trying to bank on here is we're saying the move that we are seeing is overdone, and that mean reversion should likely put this back to below the 123, 122 levels. So by us just buying a put option struck fairly close to 123 or 122 puts us in a great position to benefit from this movement if it comes back lower. And this is a great example of how when you see these type of things, these market anomalies occurring, you don't have to wait for price action to continue to show you what direction you really need to do in the underlying, when what you have available is a put option or a vanilla option that with a very certain risk. So in our example, once we spend the premium, we know that's the maximum risk that we're going to incur. But there's a hell of a lot of upside that might exist. Because think about it. If we own a 2-week option from here, and we buy the option at 123, the option price would relatively quickly go up. If the market comes back tomorrow or the day after, the option price will reflect that movement quite quickly. So you don't have to go spend quite a lot of money to potentially make a decent trade out of this. If you want to be more aggressive, then you can buy a put strike a little bit higher. So for example, if you're willing to spend $35, you can buy the 124 strike. So in other words, then you're spending $35 with the hopes that if the gold price drops below 123 or 122, that's going to be a multiple return on that investment, because you might actually get like 100 or 200 bucks back on that trade eventually. So the point being is just a quick example of how you can look at the markets when you see anomalies happening, investigate why it's occurring, and then from there decide on a most suitable, most risk-friendly way of executing this trade. All right, so this is Billy from iTradingU, and we'll speak again soon.